Hey everyone, it's Patrick.langhans Cross Country Mortgage. It's Money Tip Monday, and this is an important one. I'm gonna be giving you three-part series, the top 3 things you need to do to make sure you're ready to refinance when rates drop. Now, the reason I think this is so important is because if you follow any lenders or realtors out there, we are all saying, hey, buy now because competition is low, meaning buyers have the negotiation power right now. You don't have to pay over asking price. You can get seller to pay closing costs. You can negotiate the price. You can get the seller to buy down the rate. You don't have to make a decision in 5 seconds. Because the rates are higher right now, there's less competition out there, which gives buyer the negotiation power. The downside is rates are a little bit higher. So what you'll hear a lot of lenders and realtors say, and I agree with it, is marry the home, date the rate. So you're gonna get in the home while negotiation power is in the buyer's favor, and then we'll just refinance you when rates dip back down. Now here's the thing, refinancing is not guaranteed. You still have to qualify for that refinance. So that's what this series is all about. I'm gonna do it in 3 parts, 1 tip each week, and this week the tip is credit score. So we want you to be able to qualify with the same credit score you used to buy the home, and if not, get your credit score a little bit higher so you can get a better deal. The higher your credit score, the better deal you're gonna get on that refinance. So a few things to focus on with credit. Number 1, most important thing, make all payments on time. All credit cards, car loans, student loans, installment debt, and of course your mortgage. Making that payment on time is the most important thing in determining your credit score. Also watch out for the random bills. Let's say you get a parking ticket or a medical bill. You wanna pay those on time too, because if you don't, they could end up being a collection on your report and that can hurt your score as well. So pay all bills on time, number 1 most important thing. Number 2 most important thing is keep your credit card balances low. And when I say keep them low, we look at how much available credit you have compared to your balance. So if you have a $1,000 credit card limit and a $100 balance, that's a 10% usage, which is good. Now I hear a lot of people say 30% or less, 20%, 10%. Honestly, it's just the lower you can keep that balance, the better. So keep your credit card balances low. Try not to make large purchases on the credit. Just keep those balances as low as possible compared to your limit, and that will really help your score. The third thing is don't open any new accounts and don't close any accounts. So opening a new account is kind of like a double whammy. Not only do you open a new account that can hurt your score, the second part of that is now you have a new payment. So let's say you go buy a car and you finance it, not only did you open an account that could hurt your score, now you have a new payment. And we have to factor that monthly payment into your qualification so it can make it harder to qualify. You don't want to close accounts because closing accounts could lower your credit history. And the other thing with closing account is, let's say you have a $1,000 credit card you don't use, so it's a zero balance $1,000 limit, and you close it, you just lost $1,000 in available credit, and that can hurt that percentage of usage ratio I mentioned earlier. So keep your accounts open, don't open any new ones, don't close any accounts, and that will help a lot. The last thing is avoid credit inquiries. Too many credit inquiries, it looks like you're running out of money, and that can hurt your score as well. So make your payments on time. Don't run up your credit card balances. Keep those balances low. Don't open accounts, don't close accounts, and avoid credit inquiries, and that will maximize your credit score. So next week, we're gonna be talking about maximizing your equity. So how much equity you have in your home definitely impacts whether we're able to do that refinance or not. So that's what we'll talk about next week. If you have questions or need anything from me, give me a ring. Thanks.